Thank you for joining us this Friday, the 6th of March. I'm Sophia, a market analyst with Bell Direct, and this is your weekly market update. Well, the US bellwether extended its drawdown from its mid-February high. The news flow around tariffs was one of the headwinds for stocks this week. However, some segments of the market were relatively more insulated. The S&P 500 US Revenue Exposure Index, designed to measure the performance of S&P 500 constituents, that has had a higher than average revenue exposure to the US. It's up 2.2% year to date, outperforming its parent index by 3.7%. Now, given the cautious market backdrop, it's not too surprising that defensive stocks outperformed the market. Looking at the US sectors, consumer staples and real estate were up 5% and 4% respectively in February. And within sector dispersion decreased, signaling increased co-movement of stocks within sectors. Now, it's been an uncertain time for anyone trying to decipher market signals from the current news headlines. While traders navigate this volatile landscape, businesses attempting long-term planning face a difficult task. With trade policies shifting rapidly, strategic decision-making is severely hampered, which will inevitably have wider economic consequences. Now, the uncertainty is palpable within the US corporate sector. Adding to the unease were specific aspects of the US economic data, notably the prices paid component of the ISM Services Index, which increased, and subsequent commentary from the ISM indicated that companies were struggling to pass these increased costs onto consumers due to weak demand. Also, the Feds highlighted that many firms were finding it difficult to raise prices, which is a worrying sign for US corporate profit margins and likely contributed to the reluctance of investors to buy US dollars. However, global currency markets have seen significant shifts beyond the US, with positive developments in other regions which have provided alternatives, leading to the substantial decline in the US dollar. Now, the dollar index experienced a sharp drop, marking one of its worst days of the year, but there has been a surge of optimism surrounding the euro, particularly following Germany's announcement of a massive fiscal stimulus package, potentially reaching 1 trillion euros. Now, this news caused a significant rise in German bond yields compared to US Treasury yields, propelling the euro against the dollar. And the decline in oil and natural gas prices in Europe further bolstered European assets. Now, while the upcoming European Central Bank meeting poses some risk, its ability to provide clear guidance is questionable given the ongoing trade uncertainties and the yet-to-be-approved fiscal measures. The European Central Bank's statements may be intentionally vague regarding long-term policy. Looking now at our local markets performance this week so far, the ASX 200 has declined 0.95% Monday to Thursday, with West African Resources in the lead advancing 22%, while Clarity Pharmaceuticals declined 16%. And on the All Ords, West African Resources was followed by SmartPay Holdings, while Opthia and Australian Unity Office Fund declined the most. And the most traded stocks by Bell Direct clients were BHP, Fortescue and Pro Medicus. Clients also bought into Woodside, Telix Pharmaceuticals, NAB and Woolies, while took profits from Macquarie, Technology One and Combank. And the most traded ETFs were iShares S&P 500 ETF, the iShares Global 100 ETF and the Vanguard Australian Shares ETF. As for economic data to watch out for next week, well, on Tuesday we'll receive Westpac's consumer confidence data for March and NAB's business confidence data for February. And on Thursday we'll receive building permit data as well as the RBA Assistant Governor Brad Jones. He'll provide an update. That's all for the markets this week. I'm Sophia with Bell Direct. I hope you have a great day and as always, happy trading.